After natural gas prices recently dropped significantly, we are currently seeing them retest this support at around $2.6, which has been the price level we've seen that low forming out here in August of 2025. At the same time, we are currently seeing quite elevated price levels at the European and also at the Asian markets, but we aren't really seeing those price levels here at the New York Mercantile Exchange here at the Henry Hub spot price. And so in today's video, we discuss why we're currently seeing this divergence in price between the European, Asian, and also the American prices at natural gas. And so if you don't want to miss those videos in the future, don't hesitate to hit the like button and subscribe, and also don't hesitate to ask questions down below in the comments. Thanks for your support. Now let's begin by taking a look at the technicals of natural gas, and what you might have already seen is that we do have a invalidation of this falling wedge here in light blue. We are seeing that being invalidated with this recent price dropping here to those supports at $2.6, but that doesn't mean anything to us because we could also see that price being retracted, that we could see another bullish breakout here to the upside, as we are seeing that big volume happening here at the VRVP, the visible range volume profile, at the price areas above. And so obviously that could be a reversal signal. At the same time, what we're also seeing happening is that the CVD, the cumulative volume delta, is also rising. And in fact, we're also in positive areas here at the CVD. And those technicals do in fact offer you the chance to actually open long positions. In our eyes at Chronos, we do believe that those higher resistances could in fact be reached in the next few days. And why we believe this is actually a quite interesting thesis is what we're going to discuss in the next few minutes. And what we've opened up here is a weekly chart of natural gas that is beautifully showing you that natural gas is in fact always moving in cycles, and that there might be another bullish development happening in the next few weeks and months, because of the fact that we are seeing that history is in fact always repeating. And you do see, for example, that before those highs are forming out that have been marked by those yellow bubbles here in this case, that before we've seen those highs form out, before we've seen natural gas prices top out, we have always seen that the gold to oil ratio actually declined. That is exactly what we've seen happening in 2000 with the dot-com crash, and also in 2002, in 2004 and 5, in 2006 and 7. And so we always tend to see those cycles that tend to end by this divergence where natural gas prices are moving to the upside one last time. Then we are seeing this high form out as we are seeing this reversal happening, as we are seeing gold prices start to outperform oil prices once again. When we do start to see that oil prices are starting to outperform gold prices, what we are currently seeing, for example, once again, that actually tends to coincide to bullish rallies at natural gas. Now, we haven't really seen that in the last few weeks and months here at natural gas, but we believe at Chronos that we might see a bullish reversal, as we haven't really reached this trend line here that we've really reached quite often in the last few decades. And so this might actually be how it plays out. We could obviously see this decline to those levels that we've seen being retested, this trend forming out in the last few decades. And that would obviously indicate we could see another high form out here at natural gas before we do see a stronger market correction here at natural gas, as we are seeing gold prices start to outperform the oil prices once again. Now, this is obviously just one thesis, this is just one scenario. We could obviously also see a reversal here sooner, and that would obviously mean we are only seeing two highs. We are only seeing this lower high and this higher high forming out, and we aren't really seeing a new higher high form out, but rather a smaller move here to the upside. That is also a possible scenario. But if you have a look at it empirically, what you do see is that we have seen a lower high and a higher high form out in the last few decades, coinciding to two retests of this 100 level here at the stochastic RSI. And we have already seen those two highs and also those two retests of the stochastic RSI. And so that obviously is the bearish case, or in fact, or rather said, this is the case where we do not see a higher high, but rather a lower high form out here once again. That certainly could also be possible, but in fact, we are short-term bullish. We do believe that because of the fact that we're currently retesting those really important support levels. In fact, this has been the last really significant low that we formed out here back in August of 2025. And so as we are currently retesting exactly that low, that might be exactly the point we do see a reversal here to the upside. Now, the only thing that seems to be quite unpredictable at this point is how strong this move is going to be. Are we going to see a reversal just to levels here at the VRVP that are marked by high volume areas, by high volume nodes, or are we about to see a stronger move to the upside, maybe even new all-time highs here at natural gas prices? That could also happen, but we aren't so certain about those two scenarios. We are currently, in fact, seeing, and that is quite certain, we are seeing the European and the Asian markets concerning natural gas still being quite elevated. And so we believe that this is also going to influence the American prices because of the fact that all of this LNG supply is obviously now moved to those markets with elevated prices because of the fact that you can just sell them for much more. You can sell the LNG for much more than in America. And so that obviously leads to supply disruptions also in America. And so we do have this arbitrage going on. We do have natural gas being a commodity of global markets. And so if natural gas prices are moving to the upside at one place, that also tends to influence the spot prices in other places. And so we haven't really seen that happening to American prices yet, but we at Chronos believe that those elevated levels here at the Asian and European markets are also going to influence the American natural gas prices as well. And so short term, we are in fact quite bullish at Chronos. We believe, because of the fact that history is in fact always repeating, we believe that we're going to see at least a small bullish trend forming out in the next few weeks and months, as we're currently retesting this really significant low here of August of 2025. We are going to update you on this analysis further in the next few days and weeks. So if you don't want to miss that, don't hesitate to hit the like button, subscribe, and also don't hesitate to ask questions down in the comments. You can also join our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.